Is the tech and crypto sell-off based on fear or fundamentals? Hi, everyone. I'm Maggie Lake, and today I'm talking markets with Noelle Acheson, author of the Crypto is Macro Now Substack. Hi, Noelle. It's great to have you back on again.
Maggie, so good to see you. How are you?
I'm doing okay. I'm doing okay. I think at some point we've just all settled into the fact that this is going to be a crazy year, right? Like we're just a week into the second month only, and it's just sort of a nonstop fire hose of information and of market moves, which, listen, there's opportunity in that, right? So it's great, but really interested to get your take on what's going on, especially because you're at the intersection and we have a kind of tale of two markets or two parts of the investing universe today. If you're in commodities or consumer staples, you're feeling okay today. If you are overweight tech, Bitcoin, even small caps, it's a more painful day. So talk to me about let's start with crypto because these are some big losses. What's your sense on what's fueling this?
I've heard all sorts of explanations being thrown around. Bitcoin is in a death spiral, and no, it's not. Bear market, yes, maybe, but what's new there, right? It's part of the natural flow of sentiment here. Bitcoin, we have to remember, is very different from gold, even though it is touted as its digital equivalent. It's very different from other risk assets because it is purely sentiment and liquidity driven. And there are no catalysts to keep it buoyant. Liquidity is not great, basically around the world, really. The United States is one of the few large economies that is actually going to be cutting rates going forward. Maybe, I mean, who knows, maybe not. We had Australia start to hike this week. Europe and the UK are expected to hold tomorrow, but even Europe is already talking about the next move being up. So liquidity is not exactly going to be easing into the rest of the year. Again, it very much depends what happens in the United States, but I'm of the view that they're not going to be cutting very much. And over in China, which is what has been mainly driving the gold froth, they have a totally different liquidity environment and also liquidity reaction. They're not going to be piling into Bitcoin, they're going to be piling into gold. So you have Bitcoin acting as a liquidity barometer for the Western economies, and the liquidity outlook is not good. Stocks are on a totally different tear because they're not moving to liquidity sentiment. They're moving to spending outlook and earnings and more fundamental things like that. And again, gold, even within the West, has a very different driver. So Bitcoin's slump, rest of crypto not doing very well either. It's just part of the sentiment cycle. It stands out because of the uniqueness of it, but crypto is Bitcoin is a unique asset.
Yeah. Yeah, well put. And hey, everybody who's joining us live on Substack and YouTube. As always, drop your questions in, and we'll get to as many as we can. So it makes sense, but I wonder how everyone is feeling. I mean, I feel like in past cycles, you had true believers and they were the hodlers who stuck with it. They sort of understood the volatile nature of it. And they were sort of believing in a new system that was being built. I wonder if it feels different now for two reasons. One, you have institutions involved, which means you in some way have retail involved, or maybe, corporates are sort of just a different investor class that are coming at it for a different reason. And you also have, I have had a lot of people say to me, and you can tell me what you think about this, that, in this moment, Bitcoin's failure to do well or to at least be stable means that this argument that it's somehow a store of value or an alternative even in the future has sort of failed. I think Ben Hunt, for those who follow him on X today, said both the dollar and Bitcoin have lost the narrative war on the store of value battlefield. The dollar will take longer just because it's so ingrained in the financial system. But with Bitcoin, there's no there. That was sort of his premise. But I've heard that version of that in lots of different places. Does it feel like this sell-off this time can be more damaging to sentiment?
I'm I'm going to go with no, because people have very short memories. I mean, let's face it. And I'm sure Ben himself remembers that the exact same narrative happened in the down part of the last cycle, and the exact same narrative happened in the down part of the previous one. Bitcoin comes back. Is it a store of value? Well, obviously today, no, but stores of value are always longer term, and an argument can be credibly made that now would not be a good time necessarily to pile into Bitcoin as a store of value. But again, longer term, it still holds the same qualities. It has lost a lot of what made it an interesting asset in previous cycles. And one of those is the volatility. I mean, volatility with Bitcoin has always been a feature, not a bug. It has pretty much lost that. And I saw a chart on Bloomberg this morning that showed that the volatility of gold is higher than that of Bitcoin at the moment, which is a reminder of what a crazy cycle this is. Now, Bitcoin has, over its history, moved to a 4-year cycle. And this is one of the reasons also why its narrative of store of value ebbs and wanes according to where it is in the cycle, has always been thus. I personally have made the argument that the 4-year cycle no longer holds. I think you and I were chatting towards the end of last year, and I was pointing out that if the 4-year cycle were to hold, then the high is roundabout now. And sure enough, I think this was back in October when the last high was. So we can argue it doesn't hold anymore because, as you said, the institutions, because the halving doesn't matter so much for sell pressure, because mining is just not such a key driver anymore of the price. But the regularity of the highs does call some attention. So are we wrong? Does the 4-year cycle hold still? I'm going to still say no, it doesn't. It probably did the last one because most of the selling last year was driven by the long-term holders, the OGs, as we like to call them. And for them, they probably do still believe in the 4-year cycle and were selling ahead of it. The new set of longer-term holders don't have that kind of muscle memory. So the drivers going forward are going to be different. Will Bitcoin recover? Yes, of course, it always does, especially when a sentiment starts to move the price, which will be the next catalyst. Will it recover its store of value narrative? I would say almost certainly if we continue to see a drop in the US dollar.
The other thing I've been hearing is that a lot of the selling is a lot of the sort of Bitcoin holders, even though we talk about its utility and a lot of the early people in it were really coming from places where they were concerned about their home currency or authoritarian governments and having something that was sort of separate from that. But somebody was making the argument that a lot of it is in the US and maybe part of this diversification out of the US, i.e., I don't want my assets trapped in the US, is also somehow afoot here. Does that seem like a reasonable explanation, or does that seem like a reach?
I think a more likely explanation is that it is in a lot of US portfolios. And remember how we celebrated that it is now macro. I mean, this is something I focus on quite a lot in the newsletter. It is now a macro asset. It is in many of the big institutional macro portfolios. This is good news because it brings in the big money, and bull runs are always driven by new money coming in. It's bad news because it positions Bitcoin. It makes Bitcoin has to compete for attention now. Back in the crypto days when crypto natives were investing, Bitcoin was the main on-ramp. Now it competes for attention with all of the other assets that are going on in anyone's mind space. And right now that includes tech, that includes cyclicals, that includes gold. There's a lot of competition for attention, and Bitcoin right now doesn't have anything compelling enough to get people to switch out of some of the commodities, for instance.
Yeah. Yeah. I mean, that's the thing, especially when you see the moves in silver and what we witnessed in gold. Paul, I think we answered your question. Paul was asking, do you think the recent price action is similar to 2018, 2022 sell-offs due to the market rather than fundamentals? I think he's asking about that 4-year cycle that that coincided, but maybe
That's
not.
an excellent question, Paul. I'm going to be totally honest. I'm not confident either way. I'll go with that simply. I don't know. There's an argument to be made for each. We did hit the peak, the all-time high pretty much on schedule. And so we could justify this slump as part of the natural evolution of Bitcoin cycles. But then again, there's also the macro story, as in liquidity is not looking great. Bitcoin is very sensitive to liquidity. So the two of them going on, maybe the two of them working together make this drawdown particularly painful. I'm not sure. We're going to have to just take a deep breath and sit this one out, I think.
Yeah. Yeah, it's really interesting because of everything else we've seen happening in macro. I've got a conversation with Luke Roman that's dropping tomorrow for Market House folks, and we talk about this. Like, I ask him a lot about Bitcoin and how it fits into his narrative. He's got a lot to say on all assets and a very specific point of view. So it's really interesting to hear him talk about that and what he's made of this performance lately. So you can all check that out. It's dropping sometime tomorrow. So Noelle, the losses, of course, as we mentioned, not limited to crypto. We see software stocks are the latest to get absolutely hammered. Same question, really. Like, does this feel like just part of a risk-off, shorter-term move, or is there something fundamental happening where people are wrapping their head around, what is AI coming for? And are we going to start to see huge parts of the economy and then, as a result, the stock market get hit by the effects or the impact of AI?
That's an excellent question, and it pulls on what you and I have spoken about before, which is an overextended market. I mean, we know that all rallies eventually wind down, and the AI narrative has been consensus for so long. And obviously, I don't know about you, but I'm suspicious of anything that's consensus, especially when it just keeps pushing prices and valuations higher and higher and higher without much of an indication that the expectations are justified. A ton of capex is eventually going to run into physical limitations, and the demand for all of this, where is that really going to come from? Even if the demand materializes, how is it going to improve the bottom line without driving up employment considerably? These are all questions that no one's really bothered to answer, because AI is the future, and AI is going to drive innovation and bring inflation down and everything else that we want it to do. But it doesn't really work like that. And so I've been wrong on my timing. I've been saying that we're due for a narrative correction there for a while, and I would have missed a big part of the run up, but I'm still sticking to that. I mean, eventually the narrative will come to its senses. Is that starting to happen now? It feels like it, to be honest. People are starting to connect the dots on the software companies. If the software companies are replaced by AI agents, then who's going to buy all the AI services? Who's going to buy the chips? Who's going to, et cetera, et cetera? And especially, when you start powering through the results that we're getting out these days, and you realize how concentrated the market is and how few clients even NVIDIA relies on, you realize how vulnerable the valuations are. We're starting to see the tech stocks correct while the cyclicals recover, and that's generally not a good sign for market direction.
So I'm going to read this out loud before I digest it, but David's saying, we're going to flip back to a minute for Bitcoin because we got some thoughts on this. Perhaps there was never any real demand for Bitcoin. It was always a proxy demand for dollars. No one in Argentina wants Bitcoin. They want dollars, given that the only real use for Bitcoin is ransomware. Where next? So I think maybe sounds like, David, you're a bit crypto skeptical based on that last line, but that's an interesting thought. Like, was that what that was? Like, not an early stable coin, but that kind of idea. Like, let me try to get a hold of dollars in a way that's not controlled by either my government or maybe the US government.
Well, two things to say on that. One, everyone understands dollars. Bitcoin is much harder to understand, but we've also seen that the dollars you think you have in the form of stable coins, you don't necessarily have in the form of stable coins. We've seen Tether, freeze certain addresses. We know Circle does this all the time. There's no such thing as a totally safe stable coin holding, because even if you are self-custodying, they do have a way to be able to freeze the account, whereas Bitcoin doesn't have that. Bitcoin is digital gold in that respect, just like the central authorities can freeze your asset holdings unless you happen to hold gold bars in your backyard. Similar with Bitcoin. So Bitcoin's demand around the world is actually that. It is a sovereign asset that people can't take, that no one can take away from you, and that no one can devalue. Again, also stablecoins, you can't say the same about them either. Stablecoins value is entirely linked.
Well,
to
I
you.
brought up stablecoin. David didn't. I made that leap, but
yeah, well, I mean, let's just say stablecoins being the on-chain representation, because for most of the people around the world, stablecoins are easier to get than dollars.
yeah.
So again, they are they're representative of a value that can be diluted, debasement, et cetera, et cetera. So demand for Bitcoin, not just ransom, in fact, less and less. I mean, the law enforcement authorities would love most ransomware to be conducted in Bitcoin because it's easier to trace.
Well, I thought about that because we have a very high profile case here, which I won't give air to in case the person is just capitalizing on a tragedy, but they were supposedly asking for a ransom in Bitcoin, which made me
it happens.
a bit
It does,
skeptical.
and it happens way too much. But Bitcoin's network is transparent. It is easier.
That's
to
what
trace.
I thought. I don't think they're actually crypto holders, because I was like, wait, but if you ask for it in Bitcoin, like unless someone's giving you a cold wallet, they're going to trace it to you. So
Yes,
I don't think that's very
crypto is kind of stupid for criminals to use. It's, there's obviously a lot of illicit financing that goes on, but not nearly as much as in cash, because it's easier to hide your traces with the banking system.
I think David brings up a really interesting point, and I really appreciate that comment, David, because it's this like utility part, the bridge to the masses. Because I mean, like, it's not just Bitcoin, by the way, that's down, right? ETH is down a lot as well, and I read all these amazing sort of future things. And for those who are wondering, like, is it dead? And, what is this all about? And how could it be used? I've reposted this before, but it's really worth checking out Jordy Visser's Substack. Noelle, I know you read it as well. And he's got some really he has a really interesting, very grounded way of talking about like the future architecture of finance. And a lot of people who are bullish are really talking about payments, which is super interesting. And when you read it, you're like, that makes sense. And then there's this question that David, at the heart of what David's talking about, which is like the sort of the bridge, right? Like, and the sort of that ease of use and the use cases and the bridge to mass, all of that, which seems to be, for all the building we hear about, still really elusive, And so
Absolutely.
I think that's,
and it's a very valid point. What is Bitcoin for? I mean, to be honest, I have some Bitcoin, not nearly enough, but I have a little bit. I will never use it as payments. I mean, it's a fun thing to try and do. I've done it for fun, but it's not something you're really going to do, because where I live in Europe, and the payment system works really well. But my interest in Bitcoin, my utility of it, is obviously not going to be the same as someone who lives on the outskirts of Kinshasa, or someone who is denied banking in Shanghai for some protest reason. It's different things to different people around the world. And we always have to imagine we're comfortable, we're lucky, we live in fairly stable financial systems, long may that continue. But most of the world doesn't. And while dollars is something that they will understand much more readily than Bitcoin, because dollars are accepted pretty much everywhere, Bitcoin is safer for many of those who understand the value of gold. That said, the usability of it is still difficult. It's still not easy for most people around the world to set up a Bitcoin wallet and hold it securely. And I personally have a terrible memory. I wouldn't begin to remember where I put my seed phrase. So it's not ideal yet. It's certainly not something you're going to recommend your friends and family put their life savings into. But for portfolios looking for a digital hedge that not only represents a hard cap asset longer term, and with growing demand around the world for the reasons that we've discovered, then it is an interesting narrative. Once you get beyond the cyclical movements and the liquidity sentiment. And it's easy to say, how do we get beyond all that? Well, cycles do their thing.
Yeah. Yeah, it's really fascinating to watch, and I'm compelled on arguments on both sides, and so I just try to stay as sort of educated. And Noelle, this is where your Substack is so helpful. And as I mentioned,
I do try to steel man the arguments. Obviously, I do believe that Bitcoin has a future. Would I be buying Bitcoin today? Probably not, to be honest. And is this downturn, a shock? No, I've actually been saying that there's got to be a market correction. Sentiment will take a hit, and Bitcoin will get hit. hit particularly badly, especially now that it's a macro asset in portfolios. It's the easiest one to get rid of 24/7. And it's the one again, most people don't understand it as well. So it's the first thing out the door. That's what we're seeing now. There's other stuff driving other asset groups in the market, different types of narratives, confusing times. But what's happening in Bitcoin now is not great. And I know a lot of fund managers are suffering and startups are starting to wonder if they can continue. But it is part of the cycle, and it will return as it has done every single other time. When? I don't know. Probably not yet.
Yeah. Yeah. And I think we're in an environment now where I'm having a lot of people, and by the way, Luke has a great line that you probably heard him say, which we talked about, that he feels like Bitcoin is the last functioning fire alarm. And so when you're thinking about a system that may be in transition or under stress, I think someone said to me, there are times to make money and really focus on profits. And then there are times to hedge and try to protect as much as you can. And so when you're thinking about how to operate with that mindset, which is different than 10Xing it, then I try to keep a really open mind and think about this. And so I appreciate the work you do staying on top of, because there's so much happening and it's just beyond what most of us are following. One thing we are following, and everyone, I love this conversation. They're all sharing some different resources, but you took the words right out of someone's mouth when they were asking something. But one thing that we're talking a lot about is jobs. And I want to circle back to this for a second, because we did have an ADP reading that was weak. And today we're not going to get Friday U.S. payrolls because of the brief government shutdown. Hopefully it won't be that too much of a delay. But how are you feeling about the health of the U.S. economy? Because I'm getting a lot of mixed comments and readings on this as well.
More optimistic than I was. I was pretty pessimistic a couple of years ago. I called that one wrong. We didn't get the slowdown that I expected. I'm more optimistic now because the jobs market is slowing, but it's not weak. It's weaker than it was, but unemployment rate is really the one to keep an eye on here, and that is stable and expected to tick down in the next report when it eventually comes out. But that said, there are signs of a weakening economy. However, this weakening jobs market side, but that's not a bad thing in the sense that imagine we were in a very hot jobs market right now at a time the working population is decreasing because of deportations, etc. Well, that would be a very strong inflationary pressure, and just imagine what that would do to rate cut expectations. In other words, the wage spiral would push inflation up, which would mean there's no easing coming, which would push the market into even more of a tailspin. So the fact that the jobs market is adjusting to the new work environment, to the new workforce size, is actually a positive thing. And Chair Powell himself has often said what's most important is that the employment scenario be in balance. It's hard to argue it's not in balance. And the ADP number is weak, yes. Don't tell the full picture. They don't include government employment. But I guess we can also assume there's not going to be a lot of hiring at the federal and state level, given the recent controls they put in. Who knows, maybe that will surprise us.
Yeah.
But it doesn't look worrying enough yet to cut rates much further from here, unless we do get a strong slowdown in inflation. And while the consumer inflation numbers are not looking terrible, the wholesale inflation numbers are climbing.
Well, this is interesting, isn't it? And you hit the nail right on the head. As always, we may be in an environment, because of everything you see happening with reshoring and commodities, and now we've got this announcement of a natural mineral stockpile they want to do, although they're talking about some floor and price on that, which knocked those stocks today. But you have this huge push, this sort of national security push in that direction, coupled with the AI build out. So you could see pressure on commodities and manufacturing and, the sort of goods part of all of that, while you see the consumer side sort of depressed. And that puts the Fed in a really tricky position, doesn't it? It's got this blunt tool of rates, but if you have this now bifurcated economy, just like you have a bifurcated consumer, how are you trying to sort of have one cohesive policy for that?
And also the impact of the markets on the economy. And
Mm.
arguably, the stock market today has a much bigger impact on the economy than it did even at the turn of the century, which was not that long ago. It may feel like it, but it wasn't. And going back to the different inflations, if you have producer price inflation, because commodities are part of that, but it's not the only thing. You have a whole lot of goods parts and that feed into that index. If that is either sticky or climbing, whereas consumer inflation is falling, what is that doing to margins? What is
Mm.
that going to do to share prices? What is that going to do to liquidity? Because the liquidity indices are largely based on the stock market index as well. So there's a lot of downward spiral potential there unless the inflation on both the wholesale and the consumer side start to come down.
Yeah, that's a great point, and that was the concern we saw with tariffs, right? It didn't you can argue how much it had an impact or not, or whether it's been spread out, but the concern was about margins, which you're right, are front and center. How are things feeling in Europe since you're sitting there? I have to ask you because there was this, the rest of the world rotate out of the US to the rest of the world. That certainly was in vogue last year. There's a lot of talk that it will be the case again this year and that we're kind of in a new era for that. How does Europe look situated?
In terms of inflation, pretty good. I think we got an inflation number out. It might be this morning, it might be yesterday. Time is blurring, and it was under 2%. So things are looking good in terms of inflation. No need to cut rates further. No sign of the hike, although they are saying the next move will probably be up, but not necessarily because of the economy, more because probably the currency at the time. Anyway, economically, Europe is not doing terribly, but we're coming into a split situation where you have Germany shuddering to a halt. Germany has been the economic driver. Right now, the growth is coming from the south of Europe, largely because of tourism. Is this sustainable? I'm not sure, given the political mess that Europe finds itself in at the
Mm.
moment. So
Yeah.
yeah, Europe is a huge mess politically, but economically, it's not really teetering on the edge. Except Germany is a worry.
Yeah, which that was a great performer because there was this anticipation of defense spending and a ramp up of, the German manufacturing machine. Now talks with China. I mean, I think there was hope that Germany would be kind of leading. Is that a surprise and a disappointment?
It's expected. It had some disastrous energy policies, and you can't reindustrialize without strong sources of energy. And it's closed down all of its nuclear plants so it could import energy from Russia. That is obviously not going very well for it. It's opening for environmental reasons. It closed down all its nuclear plants. Now it is reopening coal plants
Mm.
because it doesn't really have a choice. Now, so a mess. Part of the mess that European politics is in at the moment. You're probably following some of the news that we're getting out about censorship and political interference in elections, etc. It's pretty terrifying, to be honest. And again, coming back to one of the reasons I'm optimistic longer term about crypto is one of the things I've been writing for quite some time now about is in an uncertain world, unrest does pick up. And
Mhm.
when unrest picks up, so does the repression of that unrest from powers wanting to hold on. And when you are repressing unrest, you are introducing censorship in some form or another. And that's going to either take the form of social media bans, which we're starting to see, and or it's going to take the form of debanking of anyone who doesn't agree with the system that they're in. We haven't seen that yet, but the UK is perhaps a bit further ahead on that. And assets that you can hold off the grid, not part of the traditional system, again, they take on a different type of utility when citizens and even businesses and even sovereign nations are concerned about being kicked off the existing system for not complying.
Yeah. And, you certainly a lot we've seen a big move with gold, but if you're an individual, you're not sort of running around with a briefcase full of it. And the
Yeah,
only
hard.
guarantee is
Yeah,
physical delivery, which is,
hard to flee across a border with a backpack of gold as well. Happens to be
because
really
it can be
quite heavy. And
confiscated.
again, I'm not being, this isn't conspiracy theories here. This is obviously something we in Europe think about quite a lot because we all have friends in Ukraine and we know harrowing escape stories. But especially given the creeping censorship that we have been seeing over the past couple of years, and that seems to be accelerating, this is obviously something front of mind. And I'm sure even many of you in the United States have had to deal with hints of this recently. Again, no conspiracy theories, but just read the headlines, and censorship and polarization are becoming part of our daily feed, unfortunately.
Yeah. Yeah. And it's extraordinary that we're having this conversation when we're talking about, what were perceived as developed, free,
Yeah.
democratized countries. And I saw, for those of you who you go down the rabbit hole, there's some messages on Telegram spreading concerns about and so they're kind of all over. So you can hit the headlines and see. I was surprised. I distrust everything I see on any kind of social media platform. So I've got to do my own due diligence. But I was like, wait, is this a bot? Like, is this real? And apparently there are real concerns.
Yeah, no, I mean, unfortunately, here in Spain, our government has decided they're going to ban social media for under 16s, which is fine. But how do they know your age without insisting on some sort of identification when you sign into absolutely anything? And you can see where this goes, especially at a time when people are concerned about privacy, especially when they're concerned about repercussions of what they may say, even in the privacy sometimes of their own homes. It's scary times, and we never ever thought we'd get here. But this is one of the reasons why, at a time when so much is changing in the world and what we took for granted is being questioned, we can be glad that a technology that gives us an alternative exists. It's not ideal, maybe volatile, prices not looking good at the moment, but bigger picture, we should be glad it will be able to offer people some sort of lifeline should the direction of travel continue.
Yeah. And also a reminder for us all to stay abreast of what's going on, keep up. I mean, we started out saying it's a fire hose of information coming at us, and it is, and there is a lot of change, but we all have to make sure we're plugged in and pay attention. And also, Cobes was just recommending another podcast. We're all for recommending other podcasts when you're in the chat. We appreciate it. And we restack as many, and we take your suggestions. If there's a good one, we want to know about it as well, so we can share it with everybody. So we're all in it together. So appreciate that. Appreciate that recommendation, Cobes. Noelle, it's always such a pleasure to catch up with you. If you are not following or subscribing to both Noelle and I on Substack, please do that so you can be part of these great conversations. And Noelle's doing great work keeping across all of the developments in sort of, let's say, blockchain. I keep having issue with vocabulary. I'd like us to find another name for all the innovation that's happening in the space.
Absolutely. I mean, the crypto ecosystem is terrible at vocabulary, always has been. But partly the reason is because it emerged spontaneously, almost like much around the world, and there was no one to decide the vocabulary for them. So.
Yeah, exactly. But the problem is, and we'll end with this, it gets grouped in, right? Any concerns about Michael Saylor and what's happening with those sort of companies and that policy? Because this is another thing. I read amazing sort of articles that are really focused on tech innovation and some of the issues you just talked about having an option for people in a very quickly changing world. And then you see these other things, and I can understand people being very concerned about what looks like some kind of Ponzi. I'm not saying it is, but just the concerns that are surfaced. Is that a worry, and is it bad for the industry? How does the industry feel about it?
I have an unpopular opinion on this, and that is that the digital asset treasury craze was very bad for the industry. I mean, a lot of them just didn't make sense. And we see this in crypto. We see this often where let's just make money quick and the hell with common sense and take advantage of the momentum, etc. And it deflated, as it was always going to do. But the big difference is the digital asset treasuries have nothing to do with crypto utility at all. It's pure financial engineering, and it got frothy financial engineering. And then again, that never ends well. It's a risk in that they now hold, these digital asset treasury companies now hold a lot of crypto, and many of them, most of them, if not all of them, are now well underwater, and not all of them are going to survive, and they're going to have to sell the crypto that they hold just to, be able to wind down. Essentially, the really bad news would be were either of the two big ones, which is Michael Saylor's strategy and Bitmine, which holds ETH, were they to get in big trouble and have to start offloading. That would be really bad news. But that does not look likely because of their particular structures. No debt, no margin calls, no reason to unwind. The only thing that would change that were if the founders or the leaders to lose their backbone. And again, knowing these individuals, that's also not very likely. That said, I'm not a fan of the concept, but people have made a lot of money on this. I expect them to make a comeback and hold in the meantime. Not too much of a threat, the washing out of the flimsier ones. obviously was expensive in terms of price depreciation, but is good news for the industry overall. Will they come back? Yeah, unfortunately, probably next time things get frothy.
Yep. That's always what happens. Noelle, fantastic stuff. Thank you so much. Always a pleasure to spend some time with you.
Wonderful chatting to you, Maggie. Thank you.
Thanks, everybody. Great conversation happening in the chat. Thank you for joining us as always. We'll have the write-up tomorrow, and then keep your eye out for Luke Grumman. Really fascinating conversation, and jump in the comments. Let us know what you think. Appreciate you all. We'll be back on Friday with Dale. NASDAQ finally went where he expected, and I suppose he's not surprised that the Bitcoin levels. We'll talk about where he sees support for all of the markets that are on the way down and what he's thinking about on the way up on Friday. So we'll see y'all then. In the meantime, take care and good luck out there.
Bye, everyone.